The market moves higher as expected into Fed Day. Will it be a Fed Day flush? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that we might see a tiny pullback, but ultimately we were looking higher over 4,200, and that's exactly what we saw as the market pulled back in the pre-market before pushing higher over the 4,200 level to close the day. Now, as we head into the Fed, the question is, will this be a Fed Day flush? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, we have ended the month of October, and on the screen, you can see our trading results from our new day trading algorithm. We started it at the end of September. Now we have a full month of data from October, and we had 58 trades. You see every one of them on the screen. We don't hide and just show you the winners. I showed you every trade. We have 36 winners, 21 losers, and a break even for a 63% win rate and a $714 per contract profit. That means if you traded 10 contracts per trade with me, you would have made $7,000 in the month of October, and that's pretty good for day trading results. So if you want to be a part of a winning team with proven results, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500. As I talked about yesterday, we should be looking after that move up for a little bit of a pullback and then a move higher after that. Of course, that's exactly what we saw. Market pulled back here, and now the ABC off of this low does target our 382 pretty much right on point. So I've already got it on the screen. If you go from the low to this high right here, back to the pullback, and you come up to the 1.0, it's 42.42. We're looking for 42.37. So it's right on target with what would be that wave 4 before we see the wave 5 lower down toward that 40.97, 40.96 area. I am not 100% sold. That's what we're going to see. In my Elliott Wave for Beginners course, I do go over several things that show you how to see when a bottom is in, and this does have very many of those characteristics. So I'm not 100% on board with a spiking lower. That doesn't mean it can't or won't happen. It means that I'm going to put it as my secondary path right now. It's not a slam dunk in either direction. Okay, I do think we will probably drift up into this range either before or right after the Fed meeting. And then what happens from there will kind of tell the story. If we get a spike down that holds and then a push back through, or just a direct move through, either of those situations where we move through 42.36 and then 42.73, then it's much more likely we're going to continue back up in wave 2 toward the 43.50, 4,400 area, as high as, okay, 45.51. Now, I don't know necessarily that they'll get that high. That is the top end of the range. The more reasonable target and the more consistent target would be 4,400 to 44.69 overall. Of course, I don't think that's going to happen tomorrow. I think that over the next couple of weeks, if that's what's going to play out, that's what we see. And if you remember, I've talked about the fact that this is a diagonal to the downside, and when diagonals end, you do get very strong counter trend moves. And so we would be looking for a break of that resistance that I just mentioned. 42.73 would be the upper end of that. A break of that, and then ultimately over this high here at 42.90, and we can be off and running in a pretty strong squeeze back to test this high, which is right in between the 50 and 618 retrace. And again, we can push all the way up to 44.70 pretty reasonably. And then if they hit 45.51, that's not out of the question. It is a diagonal retrace. We can see very high numbers, but I don't think we'll get that high. I think this area here is very strong resistance. They've tested it another number of times and failed. So I think we'll hold on the way back up. So that's where I would look for wave 2 to start to kind of finish, but we'll have to see what we get overall. Remember, when we get those kind of moves, they don't have a ton of structure. They usually give us kind of a head and shoulder, or not a head and shoulders, kind of a head fake here at the bottom, where they come up, they come back like they're going to test, and then they just kind of go. So any kind of weakness tomorrow, other than before the Fed, we'll probably see some drift before Jerry gets to talk on the microphone and say absolutely nothing, but he's going to tell you inflation's coming down, but you and I have been to the grocery store and know that's not true. So until he starts talking, I mean, of course, right when the minutes come out or the meeting technically starts, there'll be some action. But until that time, until the Fed meeting actually kicks off, we may see just kind of a slow drift. But after the meeting, If you see them just kind of holding in this area and not being able to push through it, then I would expect lower. They should be able to get up through this area, and once they do, it would start a pretty strong squeeze as everybody and their mom is short off of this move. So the primary path, and this is just based on other factors, I think is that we kind of have a bottom in here. That is not me saying, hey, the bottom is in and we're done going down. That's me saying I think based on a few things, we should see a significant rally, a couple 100-point rally minimum up here to give us that wave 2 and then down from there. Now, of course, the alternate path is they can't get through 42.36 or ultimately 42.73. They kind of hold this area on the spike up or on any kind of move up, and then we sink and take out this low. At that point, we would be looking for a spike low into 40.97. Now, if things go bad and we get the Fed flush for the bull or for the bears, if they can push it down through 4,000, okay, then that would indicate we are much more likely already in a bigger wave 3 that would take us down toward the 34 to 3,500 area. Overall, I don't think that's the case based on a lot of factors, but we could get a spike lower and then a reversal. But again, if they continue to press and it's an all-out flush to the downside, then a break of 4,000 would open the floodgates down toward the 3,500, 3,400 areas. Over on the NASDAQ, now remember we did talk about the fact that the NASDAQ has not broken its bullish pivot just yet. It got very close here at 14,143, but the number is 14,128. They're technically still above it, but this action looks pretty ugly. As I said yesterday, they could get a diagonal. We don't really trust diagonals where you have 1, 2, A, B, C of 3, then you get 4, and then 5 up toward 14,679. I'll believe it when I see it. I don't really think that's what's playing out here. It looks very corrective, but it's still a possibility and should be left on the table. The primary path, just like ES, would be that we can move through 14,599. We don't hold this resistance here. And then we move up toward the 14,745 area. Through that would take us back toward 14,900 to 15,000 in this wave 4 right here. So you'd have all of wave 3 done, wave 4, and then we'd look for wave 5 down toward the 1618, the 13,505 to 13,292 area to complete that move. So as I count it right now, and as it's looking, this could be all of 3, and we get the bigger bounce off of the Fed up toward the 15,000 region before we start to see a turn down. But that's more about the external signals, not what the chart has shown us. So we have external tools that we use with Elliott Wave Theory to kind of tell us where bottoms are and what we're looking at and how these things work. And those charts and indicators are telling me that this should be a decent bottom, and we should be looking for a decent counter trend rally here, which tells me that 14,599 is on the radar, definitely to watch as a potential sticking point. But if they blow through that, and I think that could be the case, we could see an actual counter trend rally off the Fed meeting tomorrow. Of course, the alternate path, they need to hold 14,599, and then we would look for a move down from there. And if they do have the top of this minor wave 4 in, it is high enough. I'd prefer they come up toward 14,600. If they do have the top end, we would target the 13,850 area to the downside. So kind of a wait and see, as always on Fed Day. They're going to do whatever they do before the meeting, but the meeting is the fireworks and the actual showtime event where we'll see all the spikes in the market before they finally pick a direction and go. So just keep an eye on the key numbers. 14,599 here, 42.37 on the ES is a starting point. If they start to push through those aggressively, then you might want to start looking at much higher on the charts. Guys, if you love the information that I put out in these videos and you want to be part of a winning team, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it. Be part of our trading community and team. Make sure it's everything you want it to be before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners course. This course is helping real traders make real money and understand the market in ways that finally make sense, so that they can understand why when you get good news, the market goes down, and when you get bad news, the market goes up, and it doesn't make any sense, and it's confusing, and it causes traders anxiety, emotion, and blown up bank accounts. Elliott Wave makes sense of all of that and allows you to trade the market in a way that makes money. It is 25 videos where I go through 3 different sections: your mindset, your expectations, your KISS method, and why it works in the introduction, and the chart setup and tools. This is stuff I talked about in the video today. All of these tools and how to use them to see what you need to see, they will help you with Elliott Wave to get the confirmations you need. I show you how to set up all of those tools and use them. And then Elliott Wave for beginners, I go through every wave, why it works, why it fails, where its confirmation points are, what it looks like when it fails, what to expect, all of those different things so that you can understand the market in a way that makes sense and finally make money trading. The cool part is, if you don't want to pay for that course, it is included in both of my monthly rooms. So if you become a monthly member, you get the course for free. In my first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we day and swing trade. So we do have quite a bit of trading in our room. However, if you're looking for individual stocks, day trading, futures, and advanced coaching, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you really need to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Okay, the key takeaways for today, it is Fed day, so get ready for the fireworks. Key levels to the upside, the bulls need to break through 42.37. Bears obviously want to break the low. If they break the low, 40.96 is your first number. If they break 4,000, that is ugly for the bulls. If they push through 42.37, we would be looking for a potential run up toward the 4,400 area over the next few days. Over on the NASDAQ, again, it's Fed day, looking to see what happens in the fireworks in the afternoon. The key numbers on the NASDAQ, they need to hold 14,599 up to 14,745 to give us this red wave 4 and then down in 5. However, if they cannot hold those numbers, we'd be looking up more toward the 14,900 to 15,000 area before seeing a turn down on the NASDAQ. If they do break down directly and break the low, we would be looking for the 13,850 area overall. Guys, that is your market update for today. I will talk to you tomorrow.